Hi there, I'm Darren McDermott and you're watching Dukascopy TV. Now today I have John Sandwick from Safa in the studio to have a look at Islamic finance. Welcome back.
Thank you.
So John, as the banking landscape is changing and there's more focus now on asset management, is there a fear that Muslims could actually be left behind? And why is there so little asset management happening in the Middle East?
Well, those are good questions, both of them, and I think they're relevant to what's happening among global money center banks and the global financial community and what's happening in the Islamic banking community. On the big picture, we see that from 2002 through 2008, 2009, there was almost an explosion in the capacity and resources of global money center banks in investment banking. We saw banks that never even traditionally got into investment banking add enormous teams to do deals and transactions worldwide. Banks like Royal Bank of Scotland, Barclays, and even, of course, the traditional banks, JP Morgan. But banks like UBS, they tried to break big time into the investment banking universe. And so there was a many-fold increase in the size and complexity of investment banking operations for all of the major money center banks worldwide. Then we had the global financial crisis. And what we're reading about today is that all of these banks have dramatically withdrawn from the investment banking industry. You see hardly a day that passes without a bank like UBS or Credit Suisse or even JP Morgan saying, we're pulling back on our investment banking resources, and we're going to reallocate those resources to global wealth and asset management. This is a key policy change for banks like Credit Suisse and UBS, especially the big Swiss banks. But it's also a key policy change for banks like JP Morgan. You know, we've done some multi-year analysis of JP Morgan's balance sheet, and they have dedicated tens of billions of dollars of their capital to investment banking, to brokerage and trading, and to private equity. And a very, very small, less than $10 billion for asset management. But when you look at the profitability and the sustainability of the profits of the different business lines of JP Morgan, you realize investment banking is a very dangerous business to be in, with very volatile pricing and huge amounts of shareholder capital committed to that business line. While at the same time, wealth and asset management consumes very, very small amounts of capital and has consistent returns well above 20-25% year after year after year. And I think what's happening globally, banks are reallocating these scarce resources from investment banking and private equity and putting it into asset and wealth management. Now you ask, what is the impact or what is the reflection of that on the Middle East or on the Islamic banking community? And I'd say that's pretty clear. They're either not changing, they followed the global banks into overwhelmingly being active in local and regional investment banking and deal making and private equity. But now that the global banks have shifted to wealth and asset management, you don't see that amongst the Islamic banking community in Southeast Asia, in the Gulf, in Saudi Arabia, and elsewhere. They are still predominantly, in fact, entirely transaction banks. Wealth and asset management doesn't exist amongst the dozens and dozens of now Islamic banks from London to Riyadh, to Dubai, to Kuala Lumpur. I think that's a terrific opportunity. I think these people who generally have very, very high savings rates, you know, in America, I think the savings rate is now up to 5 or 6% for households in the United States. But the savings rates for families in Kuwait, in Riyadh, in Dubai, in Malaysia, they're 15-20% of household income is going into long-term family savings. And if the banking community could only deliver transaction banking and not wealth and asset management, that provides an opportunity. Anybody who can see that gap can take advantage of that gap. And so, while I think the Muslim communities of the Arab and Muslim communities of Southeast Asia, South Asia, and the Middle East they're suffering from the lack of proper, high-quality Islamic wealth and asset management, I see that for myself as one of the greatest opportunities in business I've ever seen.
Okay, so moving forward, where do you see the future of it?
You know, we talk about economies regressing to the mean. over time, people become more sophisticated. There's international distribution, immediate distribution of knowledge. And, I looked at myself at the penetration of mobile phones in America, Western Europe, very quickly establishing deep and profound penetration of a new technology among all people. And then I saw the same thing happen in places like Saudi Arabia and Pakistan and Indonesia, where they adopted the mobile phone and very quickly came up to global standards in terms of penetration, mobile phones per household, number of minutes used per month, etc. I think where we have this disequilibrium, because savers of capital in places like Riyadh and Jeddah and Qatar and Kuwait, they go to their financial services community and they get deals. And I think they're going to regress to the mean. They will ultimately shift their savings from transaction-oriented savings allocation to wealth and asset management savings. And instead of their buying a deal, a private equity fund, they'll buy an equity mutual fund. Instead of buying a position on a new real estate project, they'll buy a bond fund. Or, more important for my community where I'm working, a sukuk fund. Mm-hmm. And so I think the Middle East generally represents a tremendous opportunity for wealth and asset managers because of this disequilibrium, because of the sort of distorted flow of capital we've witnessed over the last 10 years, and because their local and regional banking institutions are not following the path that you see banks like Credit Suisse, UBS, JP Morgan, and RBS are following.
John, thank you very much.
Thank you.
And thank you for watching Dukascopy TV. And do stay tuned as we have plenty more interviews like this one heading your way. See you soon.